In this video, we're going to talk about how to understand price action using price action rules. The structure I'm looking at in front of me is a trend range. And as a price action trader, I'm solely relying on the candlesticks that are printing on a chart and the information they are providing me with. My goal is to identify the main pattern and key levels because I need to gather as many clues as possible to help me make the analysis of the structure I'm trading. For that reason, I need to identify the key extremes, and this is the low of the day support, and this is the high of the day, the resistance, which every trend range has. Key levels like this, they may come into play later on throughout the day, they may not, but it is always better to try to predict where these key extremes may be in case they will come into play. Now, there's a reason to every single price movement. For that reason, I need to follow these important patterns and key levels. Now, also, I need to analyze properly and cautiously the strength of the trends within the trend range. And notice here we have first example, we have a trend working to the downside. So now that I see bearish structure working to the downside, I naturally need to find a pattern. I need to find a trend. So what is going to be most likely the scenario I'm going to look for? Well, at first I'm going to take a look at this leg down. I'm going to draw my shortened trend like this. But notice we have a break, first leg, second leg, third leg to a new extreme. Generally, once I see so many new legs to a new extreme, this is indicating to me there's possibly a wider pattern, bigger bearish structure. And I can see that the prices are getting rejected by the EMA a lot. And I can see prices sloping lower in geometrical fashion. I'm going to look for spike and a channel pattern, something like this. This is the first leg that spiked down through the EMA, and the second leg is much flatter. So this is a spike and a channel bearish pattern. Notice we have a new low, second entry short, uptrend played out with the break new high. And here we have example how price action likes to move in pairs of two. So this is a visual two-legged pullback. The reason why I'm drawing these channels is not because they look nice, but it's because I want to follow the trend line rule, because we closed outside of the channel, we broke it, and this will prevent us from looking to long the market, looking to buy, because we expect to get new extreme according to trend line rules. So this is why we're drawing these channels, and notice market is about to create new extreme. So we're correcting, and we have second entry short, new low, first entry short, second entry short, and another variation of a two-legged pullback like this, similar to this. Can I take this short? Not really. Why? Because the body is still not touching the exponential moving average closely enough. This can be EMA a tail trap. You can get stopped just by one tick, form a double trap, and then market can reverse. You know, the bias is quite strong, but I can't really want to sell just yet if I don't want to cherry pick. Okay, notice prices are finding support at our low of the day that we identify early, and prices are bouncing to the upside. All right, so what are you expecting at this point on? Well, first of all, I need to analyze the pattern again. Remember, there's reason to every single price movement. These candles are not working randomly on a chart. Now, that doesn't mean that every single setup is going to work, but it just means there's a reason to price movement. Sometimes you read it better, sometimes you don't, sometimes good setups fail, sometimes they don't. The goal is to understand the structure and to gain an edge over the market on statistical basis. So are we expecting failed second entry short reversal pattern? On the way down, we're looking for second entry short high probability setup. On the way, after we have a new extreme, we're expecting reversal pattern. Well, not really. Why? Well, because if I take a look at this entire downtrend from the very top all the way down here, we only basically close above EMA here and followed by a very strong push down. So every single time prices are being rejected by the EMA, especially even here. So this is definitely stronger bearish momentum. You generally want to see, if you're looking for quick reversal, convincing up and a lot of price swings back and forth, and notice how tiny this bullish correction is compared to the overall downtrend. And there's a chance for prices indicating possible wider channel, something like this, because I'm expecting to get a stronger correction. So I don't really want to go long. Notice we have a new low, first entry short, second entry short. At the same time, I cannot go short, of course, because I have this short option in play. It first needs to get new extreme before I can go short. And notice it worked for a scalp, the failed second entry short, but it doesn't mean I can take it. I don't really want to take it just yet. And we're pushing lower. So notice uptrend played out with the break new high. Another reason why I'm drawing the channel, I have first bigger leg, second smaller leg, but basically market likes to move in pairs of twos. You can see the depletion after two-legged pullback. The bias remains bearish. So I expect for prices right now to create new extreme of this main downtrend. Okay? Notice how tiny this bullish correction is compared to the overall bearish structure. We're going to talk about this later on in the video. So this is important, how to gauge the strength of the downtrend. This one is really strong down, and this bullish correction is tiny. We're most likely not going to reverse. I'm leaning bearish. Even though I have a break and new low of this initial spike in a channel, this bigger channel right now is coming into play because it got confirmed here. And it fits nicely off these lows. I'm just going to quickly delete this to make it cleaner. You can see it fits nicely off the lows and off the highs as well. I'm expecting failed second entry long, but by the time I get failed second entry long, notice new high first entry long, second entry long, 3 dojis, EMA numerous bars getting stacked, lack of momentum. I don't really want to sell. Lower high doesn't have trigger, and if you find yourself in this situation, you can see horrible congestion. You basically need to exit out of this trade because this is just stacked next to each other. You can see horrible stack, horrible congestion. Now, if you're trading congestion, my goal is to make sense of the structure. Congestions are tricky because it is tempting to trade the market both ways. This is why a lot of traders get chopped in congestions like this. For the reason, I need to identify the congestion. It's characterized by flat EMA in the middle of these bars and a lot of sideways movement without clear direction. And this will help me to prevent taking any trades. The way I trade congestions, I either fade a breakout with the direction of the trend, or I take additional entry, breakout pullback pattern. And we have lower high here, breakout pullback pattern. Can I take this breakout pullback pattern of this congestion? I cannot. We have no room to this important key level, the support, the low of the day. Downtrend played out with the break new low. And if I take a look at this entire structure at this point on, it is really sideways, really unclear. Everything is stacked next to each other. Remember, your goal is to wait for decent high probability setup that is not congested. You don't have to take trades on every single candle. So this is really not good setup to take. Break new low, no room here, 2 sideways. Here we have double trap. Now what is double trap? Notice we have new low, first entry short, second entry short. I cannot take this second entry short because it is a horrible bar with the bullish stim. You're above EMA, first leg up, second leg up. So everybody is going short too early, just got trapped because they're not respecting the congestion and single bar is horrible. And everybody who's going long in this congestion into this resistance is going to get trapped as well. Remember, bias is bearish. Take a look at the left side of the chart. It will tell you what's going to most likely happen to the right. Stronger bearish bias, so we do not want to go long. So everybody who went long too early, felt second entry short, just got trapped. But since I don't cherry pick, this is tempting, great reversal momentum. I'm skipping entries in congestion, so I'm not going to mark it as a high probability setup, even though it looks nice. Advanced trader can recognize it, but you know, if you're in this mess, it's better to just wait patiently this mess out. Okay, and now we have break new low for this first trend. So I'm no longer expecting for prices to give me a second entry short. I was expecting second entry short all the way down, but not here. I expect for prices to go and test this breakout area. So I'm expecting a failed second entry short, but failed second entry short, notice, didn't really form. You had the failed second entry short here, but it's too far away from EMA, and already it looks like the move up already formed. So I don't really want to go long. It doesn't have trigger anyway. By the time I get failed second entry short here, it's too late. It's too sideways. You're directly into this high again, and you know you have no room to hide. Just not the great setup. It's too sideways. You wanted to see it as a part of one move, not big like this outside. And notice this is why these key levels, we are drawing them because they may get tested and prices are reacting to these key levels. So at this point it got quite confusing, but as I saw prices working low like this, okay, this is where I stepped back and I was observing the structure. I was okay, so we have a break new low here. Why are not prices reversing all the way back up? That's a little bit confusing because we are supposed to push up if this is going to be a main trend range pattern. In fact, what I can see is strong rejection down here. That means there's possibly a larger pattern. I was looking for a spike and a channel like this. You guys can see how many confirmation it really gets off of these eyes. 1, 2, 3, 4, 5, almost 6 confirmation. Here we are looking at 10,000 tick chart. By the way, shout out to Bye Money. If I'm not sure what the structure is, I can take a look at the higher time frame, which is 10,000 tick chart, and I can make sense of the structure. And I can clearly see that on 10,000 tick chart, notice we had 2 big bullish legs down, big spike down, and then a flatter channel. So we have a spike here and a channel pattern, which you can see have a break, new extreme. Then we had reversal, first leg up, pull back, second leg up, because market likes to move in pairs of twos. And from that point on, market reversed instantly back down after this 2-legged pullback played out, break, new extreme, and right now we're going sideways. So this is right now the bigger pattern that I'm playing. Notice we have lower high, but once again, signal bar is not great. Body is too far away from EMA. I can take setups like this in strong trends, but not when the structure is choppy like this. Weak signal bar, can't take it. No clean setup. Okay, we have a new low, first entry short, second entry short. I forgot to draw my channel. We have a second entry short, break of this downtrend, and notice we are back below this important key level. And you can see how prices are reacting. So had this second entry short been smaller, this actually would have been a decent setup. Because if you can see right now, we're working in this small trading range. EMA flatten, we have a down, up, down, up. So we just move from a trading range here, a little bit lower, and we are in trading range here. But the bias remains bearish. Remember, this trend right now needs to get new extreme, and overall bias in this market, if I'm going to zoom back, notice, is definitely bearish. These bullish reversals are very tiny. And also what I can see, I have first leg here, kind of like a visual to like a pullback once again. But this bar is way too big. Our stop loss needs to go one tick above this bullish bar. This is double bar entry, so this is way too big. We can't enter, and we don't get, oh, we get lower high here. Can I take a lower high this? I cannot. At this point I can see double bottom, triple bottom, quadruple bottom. Okay, even though it looks tempting, once again, far from EMA, even though it worked for a scalp, I cannot chase it. Next time it will not work. You can see what can happen here. You just need to have enough room. And then when I see quadruple bottom here in such a tight trading range, even though the bias is bearish, I can't really push it. Same thing goes for failed second entry long, new high, first entry long, second entry long, failure. Not interested. No room at the bottom of this trading range. Okay, market is reversing. I'm gonna redraw the channel. Okay, we have a break. What am I expecting at this point on? Well, pretty much nothing. It is two stacked. This is horrible congestion. Possibly expecting this high to get this option to get new high first. Okay, and this uptrend got new extreme. And notice we have first leg up, pullback, once again the two-legged pullback pattern. This is how market likes to move a lot in these two-legged pullbacks. So when you train your eyes to see it, you will be able to dissect where the corrections are ending when the market is going. Now we have a full breakout here, which was very tempting because the downtrend is strong. We are in a trading range and most breakouts will fail, and especially when you have a break new high. So if you took this trade right here, I can definitely see why. The signal bar was not great, but I can see you taking this trade right here. Decent setup. However, as the prices are working lower, what am I expecting? I'm expecting lower high or failed second entry. Long, but notice lower high didn't get triggered. It would have been ideal if you get triggered above this bullish bar, reverse it down. By the time you get lower high, once again, congestion, EMA exactly in the middle of these bars. I cannot take this setup. Two stack to congested. And notice you have a new high, first entry long, second entry long, failure. So this right here is a failed second entry long high probability setup because we're coming after failed breakout. Strong push below EMA, uptrend has a new high indicating bullish momentum played out, and larger two-legged pullback, and the main downtrend still needs to get new extreme. Okay, zoom out like this so you can see what is the bias in this market. So this right here is a failed second entry long at the top of the trading range. You want to buy low and sell high. Okay, once I'm watching this, I'm not giving up on short just yet, because after the two-legged pullback tried to reverse the market and both failed breakout can generate strong momentum in opposite direction, and I'm expecting to get now second entry short. We have a first entry short, second entry short would be ideal. It would also be failed second entry long. I really want to see another test of this low. I'm not interested in buying. You may be wondering, okay, Thomas, but we have first leg, first leg down here, second leg down here. Why are we not buying this low? Well, main bias is bearish. Remember, the downtrend needs to get new extreme. We traded down into trend range. We're not really buying low. We're mainly focusing on selling high with the direction of a trend. Okay, and we're coming out to failed breakout after two-legged pullback played out. So there's a stronger momentum. For that reason, I'm not really looking for longs here at all, in fact. But there was no second entry short, and market continued working lower. And notice, I'm gonna redraw this. This channel right now just finally has a break and a new extreme. Now that I'm looking at this failed breakout, I can really also mark it high probability. It's just the signal bar making me mark it a little bit aggressive, but definitely decent failed breakout right here because the trend range is really proven, and clear break, sideways structure, close outside of this trend range. So notice we have a break new extreme of the main channel. So I need to really respect the bullish correction. We have new low, first entry short, second entry short, horrible signal bar. I don't see any setup. Definitely don't want to take short. And also you have a new high, first entry long, pull back, second entry long. Now when I was watching this live, I was not ready to go long here. I was still leaning more towards bearish bias. But when I look at this option needs to get new high. We have a new high, first entry long, second entry long, nice bullish bar. So I'm going to mark it as a high probability setup because this pattern is almost identical. Notice the way it formed. Notice the second entry long formed quite lower below EMA. Notice yesterday we had the exact same scenario. Where was it? Oh, here it was. Notice We had trailing range structure. We have new high, first entry long, second entry long, form exactly the same way. And yesterday it was also first entry short, second entry short failure. Option needed new high. So if I'm going to take a look, for that reason, you may be wondering, is below EMA? No, that's okay. Today it wasn't filled second entry short because we have a new low, first entry short, second entry short failure. New low, first entry short, second entry short failure. So for that reason, it was a little bit confusing. But if you understand what's going on here, you have a new low here. You're probably going to pull back in trailing range and uptrend needs to get new extreme. Okay, I don't see any good setup. No trigger above this felt second entry short. Just going sideways, going sideways. At this point on, I'm leaning more bearish because this resistance is coming into play again. So I'm going to redraw this channel. Okay, but we can see that we're pushing higher. Okay, there is a possibility for this channel, but I was still not focusing on this. I was still more leaning towards bearish because notice we're pushing lower. You don't want to go long directly into these highs. Okay. Pretty much no high probability setup. Okay, and as the price is strongly pushed above EMA, this is where I finally thought, okay, strong push above EMA, resuming the bullish bias. I expect new extreme for this high, but prices, okay, I was expecting higher low, but notice horrible higher low, bearish bar, not a great setup. I cannot go long above it, and it was great that the signal bar was bad because with better signal bar, I would have gone long here, and market continued working lower. So at that point on, I deleted the channel also, although I'm going to keep it here because it is still going to come into play. Okay, now we have a micro double bottom and market is reversing. So I'm going to do redraw the channel and we have a new low, first entry short, pull back, second entry short. Notice the trend range that started all the way to the left still remains its strength all the way to the right. You can see the support is holding, flat EMA, a lot of price swings up and down, up and down. We're coming off the lows. So right now the downtrend played out. I'm expecting to get a felt second entry short. New low, first entry short, second entry short. But it really didn't set up well. Double bar entry, big, horrible, stacked. I can't really end this. Okay, I can see two little breaks, which is unproportionate or unclean. So I'm going to redraw this. But regardless, I have overshoot. And overshoot leads to unnatural activity in the market, to overbought territory, and I expect break of a channel or reversal. And if I'm going to zoom back, notice this initial channel also has new high, but more importantly, this is what I was really focusing on. This is the two-legged pullback pattern out of trend range that we talked about in our last video. First leg, sideways structure, second leg, depletion, fell breakout above the trend range, and most breakouts of trend ranges will fail. So at this point when I'm watching this, I'm not thinking bullish, and I'm more likely not thinking about uptrend creating new extreme. What I want to see is prices pushing back into trend range after this two-legged pullback played out. And I want to see felt second entry long. We have a new high, first entry long, pullback, second entry long failure. So this is what I'm expecting. I don't want to see new high for this channel because this is, remember, this is the second leg. So the channel may not get new extreme for the second leg, especially if it's the second leg out of the trend range with overshoot and after fail breakout. I really want to see felt second entry long, and we have new high, first entry long, second entry long failure. But if it fails below this, the signal bar is bullish. I want to sell below strong bearish bar. I noticed that some traders had an engulfing here. I didn't notice. I just got this and market continue working low. If you had tick above bullish bar here and reverse it down, you can go short here as an easy high probability setup. But unfortunately, the way I have it, I don't really sell below bullish bar, so there's no entry, but great setup. Otherwise, context is really great for this felt second entry long. Hopefully it makes sense why you want to focus on felt second entry long here. Okay, this downtrend is in play. So what do we expect? New extreme. I'm not really overcomplicating it. So I'm looking for second entry short, new low, first entry short. Can I get a second entry short? Okay, so we have a congestion. I'm going to redraw the congestion. If second entry short forms here, congested, I'm not interested. I want us to see it at the EMA. And notice what we have. We have a second entry short here. So this right here is the first leg up, pull back, second leg up, break new extreme. This downtrend needs to get new extreme. This is the second entry short. It is above EMA. Is that a problem? Not really, because also notice it is a little bit reaction to this key level if I'm going to play around with it. But more importantly, it is also fell breakout above this congestion. So this right here is a high probability setup. My only trade for the day, second entry short, small little bars, is worth the risk. You're really risking very little here, and market continued working lower. At this point on, this downtrend still needs to get new extreme. Remember, you have a new high, you have a lower high which you cannot take, horrible bar, but notice you have a new high, first entry long, second entry long, failure, a new low, first entry short, second entry short. So two high probability setups in one. EMA keeps rejecting, downtrend needs to get new extreme, but notice the signal bar is once again with the bullish body. I can't really take such a weak bearish momentum like this. If I'm in congestion like this, although we're probably going to break lower, I really want to see good momentum. Unfortunately, the momentum on my bar was weak, but notice we eventually continue pushing lower. And notice once again, we're going to reanalyze the strength of a trend. Notice here, this uptrend has multiple breaks below EMA and a lot of sideways structure. But here once again, after the full breakout, every single pullback to EMA almost is getting rejected. And this is definitely steeper and stronger bearish bias. So once I see, okay, we came back, tested the breakout area, which is typical. Most breakouts will fail, but we're not really looking to go long, giving the overall bearish bias, notice, and giving this shortened, stronger bearish bias, because this was really like a one swoop down. It looks like a hockey stick if you think about this. This doesn't look like that. This looks definitely like a more sideways structure. This has almost no sideways structure. This is a big downtrend. And once you see prices breakout, pullback pattern, okay, this is where you have to think, okay, so I'm going to look for additional wider pattern like this. So this is why you can extend channel here, because this told you right here, combined with the overall structure size, that you're going to have a stronger downtrend. Micro double bottom resets the count. I need to redraw the corrections every single time. By the way, had I had second entry short here, can I take it? Probably no. Still would have been far away from EMA most likely. You're not sure if the channel is going to get valid. Also, although if it confirmed the channel, the probably second entry short could have been great because it would have confirmed the channel, but it never formed. Notice first entry short pullback, second entry short close outside, new extreme indicating uptrend played out. This is the two leg up pullback, first leg up, second leg up, and this right here is probably the easiest trade for the day. I was on my break today, but with such a great signal bar, look at this. New low, first entry short, second entry short. Everything played out. EMA keeps holding. Downtrend needs to get new extreme. You know, this is textbook setup that it doesn't get easier. You would have had to write this out as I'm watching this, but eventually market continue working lower. You barely scalped out. Market push higher. Can't really sell, but notice once again, there's a reason to price action. Market is coming back to test this initial support of the smaller trending. So you can see the price action is talking to you. It's a language. You can work with these patterns, and the last thing the price action is random. It's not definitely easy to spot this live, especially if it's choppy like this. Make no mistake about it, but your job is only to find a couple of trades a day. You don't have to be perfect. You can be far from perfect. You just have to be mentally strong and pounce on the setup when you see you're reading it correctly. You have a break new extreme, and once again, notice bigger leg here, second bigger leg, larger two leg pullback. This is the key, what it's all about. Okay, strong bullish rejection. I'm gonna redraw it. I have overshoot. Okay, if I get second entry long here, can I take it? Uptrend needs to get new high. I can't, because this downtrend is in play because we had overshoot. Remember, overshoot can lead to stronger momentum in opposite direction. Didn't trigger anyway. No setup here. No setup here. Okay, market is reversing up. We expect new high. Okay, we reverse down. Nothing much happening here. We have a break. We expect new extreme, but we are far away from EMA. I have a second entry short here, which I cannot take because uptrend is in play. We had a break new low. Am I looking for failed second entry short? No. Once again, bias is strong bearish. Stronger bearish move down. This is tiny little correction, unproportionate to this bearish move down. No great setup, and we didn't really get any setup after that. So you can see how you can recognize the strong bearish momentum here and the strong bearish momentum here. I only took one trade today. Notice I had to wait a long time. I was really confident in this failed second entry long. It was a bomber that didn't form well, but your goal is just to wait for these few setups. There are a couple of decent setups regardless, but once the structure gets really choppy like this, you know, you're really hesitant to take any entry because this is really choppy. The key level is held nicely, but you really want to see some action, and you really want to see nice bars. Also, today had a lot of bad signal bars. Very typical. Almost every single setup context wise today had the wrong signal bar. So one of those days, but you can see two-legged pullbacks all over the place. This is how market likes to move, and right now the market is closing.